Today we are talking about the infamous, I don't know how you want to say it, but those two dirty words, which is interest rates. And I thought about what I wanted to talk about on this episode today about, how my clients, I believe, need to be thinking about what the market is going to look like and how interest rates are or are not going to affect that. And I was in a sales meeting at my new brokerage, Remax Hallmark, and Morgan Vaughan spoke as one of our preferred mortgage brokers. And I was captivated by the information he was giving out, and it's hard to keep my attention. So I said, Morgan, you got to come on Leverage and come chat with me and my followers and my listeners about what's going on in the market. So please welcome Morgan Vaughan, who is a mortgage broker of, I'm going to get this wrong, over 20 years. I don't want to steal your
Yeah,
thunder.
actually, yeah, almost 25 years.
Amazing, 25 years. And I'm going to speak to why that's important. And he's powered by Capital Home Lending, just like all agents, real estate agents have to be at a brokerage, even though they look like they're self-employed, they are not. And that goes for mortgage brokers as well. So welcome to Leverage.
Oh, thanks very much for having me. It's great.
Yeah, absolutely. So, I wanted to do this episode to reframe the narrative around interest rates. I actually just like popped onto ChatGPT a minute ago, and I wanted to do a really quick, like, how many interest rate hikes has the Bank of Canada done on average over the last 10 years? And it's really quite insignificant. Now they have their announcements that I believe there's 8 of them a year. Correct me if I'm wrong. But what they actually do in that announcement, hence this is the day after the very first one of 2026, of which they held flat and everybody knew they were going to. It's really not something that, if you are a buyer or seller in 2026 and you are going to do something in real estate, you are going to sell your house, you're going to buy a new one, whatever it is, the interest rate conversation is over. And so that's kind of what I want to talk about it. So today, so maybe you can just give everybody a little bit of background on your experience, Morgan. I will tell you, I think someone who's been in the business as long as you have really speaks to me, because I find that your business is very similar to real estate in that there's a lot of people who get in it for a few years and then they leave it, and there's not a lot of people who have really like been boots on the ground for a long time and understand it. And people also need to understand, sorry, and I'm going to let you talk, but I really want to say this because I think it's so important. And very similar to real estate agents who've had like their experience in the market, is there are a lot of things that you can do and and you've experienced to avoid issues for any of your clients that a new mortgage broker does not have. The ability to pick up a phone at not CIBC, sorry, but like a TD or a Scotia Bank and get an exception made. And we can talk about that if we need to. But, those are really, really important things that come along with the experience of someone like yourself, almost 25 years. So take it away.
No, that's all very good points. I mean, I don't know what the average lifespan of mortgage brokers is, but you're absolutely right. I mean, some of us have been around a long time, and some new ones that get in are great too, and they have people to mentor. But it's either there's a good mentoring system for new people or there's not. But for someone like myself, I've been in all sides of this too. So for many years, I focused mainly on like sort of alternative and subprime solutions, and I worked with a big team of mortgage brokers who, any deals they had that were difficult, they came to me, and I did that for many years. So I got a lot of experience on that side of things, and then just kind of gradually moved over to doing everything. So I do work on all kinds of mortgages, all kinds of situations. And you're right. I mean, there's two things that come along with a long time in the industry is we've gone through all the ups and downs of, the credit crunch in 2018, what happened before that. So I've seen, when I first started, interest rates were above 6%. And I didn't know any better. I was just, I'm in my sort of later 20s. And I remember the first interest rate dropped below 6%. We're all like mind blown that it was like 5.9. Wow. So this time around, when it, did the same thing after COVID, it wasn't as shocking. It was shocking how quickly it happened, of course, but it's something that's manageable.
And the COVID interest rates were necessary. We went into an unprecedented, crisis, plague, whatever you want to call it. I don't even want to think about it anymore.
No.
I think the Bank of Canada, and it's probably a whole other episode, their biggest mistake was that they didn't start raising interest rates soon enough, and it was held too long. And the government officials, up to Prime Minister Trudeau, who was saying, "Everybody go out and spend money. Don't worry, the interest rates are going to stay low. Don't worry about it." And I was one of the guilty ones, saying to my clients, "No, listen,
many people.
Our leaders, they're telling us, right?" And I think that, again, circling back to the subject that we're talking about today about reframing the narrative and why the interest rate conversation it should be over by now, is because if you looked at COVID, and I had lots of young clients, thankfully, that had the opportunity to get into the market where they couldn't have before. That was the silver lining, but there are a lot of people now who are in big trouble because of it. And so if you're waiting for an interest rate reduction, is this really a good idea for you?
Right. I don't think there's going to be any substantial changes in interest rates, honestly. I mean, I was looking at where interest rates were January 1st of 2025 compared to where they were January 1st of 2026. So a full year of changes, and fixed rates on average. So, I mean, this is just average, but the average fixed rate in January 25 was about 4.39, give or take. I mean, some people got lower, some people got higher. That was average. And the average interest rate at the beginning of this year, just a few weeks ago, was about 4%. So not much of a difference. I mean, so people using I'm going to wait till it's more affordable. Things haven't changed for a year, and most economists are saying things probably aren't going to change much more this year, especially on the fixed rate side. And fixed rates are very relevant because Canadians, historically, a huge percentage of us always take fixed rates. There was the blip in COVID when variable was so low, but there's still lots of people that take fixed rates, and I don't know that it'll ever change. So, I mean, the one thing that changed over the last 12 months is prices have come down. So if interest rates have been relatively flat, but prices have come down, affordability technically has gone up. I mean, there's other things that are more expensive. So we're just looking at this in the focus of real estate and rates. I mean, obviously groceries are more expensive and things, but the actual affordability of real estate has become better over 12 months for people that are ready to do it. I mean, I don't know that speculative buyers and that sort of thing is probably like the right time to do this, but for somebody that's been saving up and they want their first time buyers and they want to get into a place, it's the same as it was a year ago, just more affordable for most people, if that makes sense.
No, and I think that is what has happened to real estate, is that there's this like devil in the details of, where are the interest rates going? How much is this house going to be in 5 years? And I speak from experience as someone who bought her very first house when she was 23 years old with, oh my God, bubble gum and toothpicks. And I will tell you, I have absolutely no idea what my interest rate was. And I know that, and Joy Verde, that's how long I've known her. She was my agent back then. And I don't remember having any conversation with her about how much my house was going to be worth in 5 years. And not because Joy is not one of the best agents out there, but because, real estate was about four walls and building, your nest egg and buying a home and having equity. And now this idea of, and I get like there is so much uncertainty around, unemployment rates and, people's concerns about the economy. And I said that right off the bat. And, my January update was the big word just continuing from 2025 into 2026 is uncertainty. But I mean, does that mean also like when you have three children, were you ready for each one of those? And by the way, I'm not like that. I'm not being that realtor to say,
No, I
hey,
understand.
everyone should go buy because, I did or that I think you should. But I think there's this element like everyone's waiting for that perfect storm where it's like, okay, now's the time to buy. Look at your own, your own affordability, your own life, your own, shut out the noise. If you can't afford to buy a house right now, you probably can't afford to buy it if they take it down half an interest rate point.
Yeah, that's a very good point because that doesn't change the affordability that much. A 0.5% decrease for most people, it's not going to do much. And the one thing you said that I really like, and I see this with clients now, is the uncertainty. And I do have lots of people that buy, but I had clients yesterday I've been working with for a few months, and they actually just got back to me and said, you know what, we're putting a pause on looking for now. There's some uncertainty in one of their job fields, and they're just not sure what's going on. So they just said, you know what, we own a house now. We're good where we are for a little bit. We're just going to wait to see what happens over the next, 6 months, whatever it is. And that shows me people are at least thinking about that. Whereas, last year I did lots of first time buyers. I had a few other partners I work with that were very good at turning potential renters into buyers of condos. Like first time home buying got way more flexible for people last year with some of the changes on high ratio mortgages, and condo prices have come down a lot. So again, buying as an investor, if you have lots of down payment, condos are a good deal right now, but you have to have rent to cover that. But for people that are going to live in
So
them,
soft.
it's a
Yeah.
great time. I mean, prices have come down tremendously, and if it's only a few $100s difference between owning and renting, again, not speculative, but just like you said, four walls and a kitchen, bedroom, and your family's in a place that you own. I did lots of that last year, so I saw lots of first time buyers that 2 years ago wouldn't have gotten into those places, and they're very happy. I mean, they're not doing it because they want the price to double in 12 months. They're doing it because they don't want to pay rent, or they have the means to put down payments, and we're able to do that. I mean, that's what's going on now that I think people are really thinking about. So they have to make pause with, am I going to have a job in 6 months? Is my field, like I know GM just announced today they're going to lay off like 1,200 people next week. Like there are things that are going to happen over the next 12 months that are just scratching the surface, right?
I agree. I would also say in our business, like the buildings sector, I have heard a client of mine who told me her husband lost his job last year. I have another one who's saying like he's kind of looking around for something else. I think that's it's probably one of the first announcements as we're going to January. There definitely will be more. And I think that's what COVID taught people was, wow, I think I really have to, okay, so it's cheap and money was basically like it was free. But I need to factor in everything else. And the clients that I had who bought during COVID, were not buying with funny money. They were like, okay, well, my bank said I can buy for X amount, but we're not going to go there, right? Like we're going to cap ourselves here, right?
Yeah, I saw a lot of that too.
And that's what everybody should be doing, right? This is about making the best decision for yourself. Although, again, I find it so fascinating in a psychological perspective. You have the biggest pandemic, right? Like we didn't know if we were ever going to be able to travel. We didn't know what was going to happen. Talk about uncertainty. And people were outbidding each other and overpaying for properties. Like there were times when I looked at clients, I'm like, are you sure you want it? Like, that's a lot of, no, we want it. And I'm like, you're here to manage. I'm like, I just don't know. No.
Yep.
And now, like you said, it's cheaper. Yes, money's not free, but everyone's gone back to this more pragmatic way of looking at properties. But it's interesting. It is cheaper, bottom line, to own a home based on rates and prices that compared.
And there's no crystal ball as to where prices are going. I mean, some people will tell you they're going to keep going down. Some people will say they're going to go up. And a lot more people are just saying they might just stay flat. It's hard to say. And I don't really think people should always make those decisions based on my house has to be worth 10% more next year versus this is the house we've been looking for 3 or 4 years. Now we can get into it, and we're going to spend the next 15 years there. That's the kind of thought process I see with people the most.
Oh, interesting. I do want to dig into what you're hearing from your buyers because I think it'll be really good for sellers to hear what you're hearing from your buyers. Um, but I do agree. I think that, people a lot smarter than me, and I covet whatever Benjamin Tal has to say. But I've also heard him speak on two different occasions that were only 2 months apart, and he changed his tune 2 months apart. And not because he was backpedaling, but because that's how much no one knows. And he really is the housing whisperer.
That's right.
He was
I
at
agree.
he was supposed to speak at an event, and he pre-recorded because he was whisked off to Ottawa to be part of the housing budget. So I do have sellers, and there will be more sellers who were like, what if I sell next year? What if I sell now? And I think the years of seeing an increase in your property value double every 10 years like we've had that is over, at least for now. And I think that we're going to see a much more eased increase rate of inflation, you know, creeping up, again, buying well, putting the money into the house. But I think you're going to have to stay like, it used to be like 3 to 5 years. And now I think it's more like 7 to 10. Like I really am telling my clients to push themselves into something they're not going to grow out of, and that they don't have to, if they want to have a second child, have your second child here, right?
Yeah, no, for sure. That's probably, you mentioned buyers that I see. That's the same thing. I mean, the last, through COVID, even before COVID, I had so many people that first mortgage I did for them was like in a condo, as an example. They refinanced the condo to take some money out to buy like the next house they're moving in because they had kids, and they keep the condo and rent it out. Now we're in a market where even back then some people would sell the condo to maximize the down payment on their house, but now I've got people that are in condos who want to buy it because houses are cheaper, and they're having a hard time selling the condos in a time frame that they need. So sometimes it's like, well, we found this great house, but we have to sell our condo, and it's like, well, you don't know if it's going to sell in 30 days, 120 days, 90 days. I mean, condos are selling, but there's so many of them that there's got to be something unique in their selling proposition that I'm finding with my sellers, right?
Yeah, it has to be a really good condo. I would say if there's anybody listening who's buying and selling and owns the condo, I have told all my clients, sell your condo first, know what you have in your pocket, and we'll contingency plan about where you'll live. Way better. Like there's nothing that will take years off your life than owning two properties when you can't.
Oh yeah, when you thought it would only be a small time frame or whatever, yeah.
No, 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 exactly. So, yeah, so what would you say is the difference between what you're hearing from buyers now, in the sense of like hesitation or, what their concerns are when you have sellers who just think like, interest rates are going to come down and the economy is going to ease up. What are you hearing on the other side?
Yeah, it's so from a buyer perspective, the one big shift I've noticed in my colleagues as well that I talk to all the time is there's not as many buyers getting qualified and such, but the ones that are, almost all of them are buying within, 1 to 4 months, which means people they're getting their stuff arranged, they're getting their finances in order, and they're ready to go. Back when everyone was buying everything, I would get calls from, pre-approvals every day. We'd have someone, yeah, you can do this. Not everyone would buy because the prices just were escalating so quickly that they couldn't. Whereas now, when we go through the exercise, I find almost everybody's buying, unless maybe something changes with employment or something like that. But most people are buying when they take the time to provide documents and get qualified and have these discussions. So that's the number one thing is that. And, I find that
That's an interesting difference. Sorry, I think it's worth talking about. I think it's an interesting difference. I would also say what I'm seeing on my side on my listings is that the people that are coming to buy are not kicking tires.
yeah, exactly. Yeah, that's what I'm finding with on this side. And I think that the people that are still trying to sell for these high prices of yesteryear, they're the ones that buyers I think sometimes don't even want to approach. It's like, well, you're listed at a price, like, because I get my clients will call me and say, hey, we're going to put an offer on this property on Sunday. You know, can you just make sure our numbers are good? It's like, yeah, and I'll ask, like, what is it going to go for? And then we can go take a look and see the price has been dropped 3 or 4 times, but it's still. Those are the ones I think that people are more hesitant to. That they might try putting an offer, but a lot of times when I follow up with clients, oh, what happened with that house? It's like, well, we offered what they listed, but they wouldn't take it. It's just like, oh, that's interesting. So that's kind of this thing I see with buyers is people are way more aware of what they're paying and they're not afraid to walk away from something in some cases. If it's been listed for a while and if the sellers won't budge on prices, I notice buyers are like, I know I can afford this, but you know what? I'm going to look around somewhere else because this place is a bit more than I think. And if they're getting the right advice, sometimes it is more than they should be paying, but not all the time. It just depends, right?
No, it's a very good point. I think there's also a misconception that buyers all want a deal right now.
That's true too.
And my question to you is, are you seeing that? Like, are you seeing that your buyers are all like, oh, I'm going out because I'm going to go hunt a deal? Because I've shared with my clients that, so first of all, I don't think we can paint like a brush to the entire market. Let's just put it that way. But let's just say we're dealing with single family homes and not condos because that's definitely recessionary. We'll park it. But I would say I've seen great properties sell in multiple offers.
Yeah, that's still happening. Yeah.
They're selling for what you would expect them to sell. That's the difference is that, and I say that to my clients, it's like there was a property by Christy Pitts that sold, I think they got like 25 offers, which is unheard of in
Wow.
this, like, yeah. But it still sold for what it was worth. So, going back, like the buyers are out there, but I think they're just much more savvy and they're just not, they don't have to pull the trigger. So do you find that they're willing to kind of just wait, like you said, like they'll walk away?
Yeah, because 25 offers, I always say, like, I always wonder when I hear that, it's like, well, how many of those were actually offers that would have been accepted? And is it 5 of them would have been accepted, or you know what I mean? Or
Maybe.
so that's kind of the thing there. So I think people have gotten used to that, although I think they're still a bit shocked when you read an article about places sitting for 6 months and then something sells in a week with 20 offers. But I do find that people are just being more careful about what they're spending. And I do see sometimes people will say, you know what, the max I was going to bid on this is this much, and they move on to the next place if they don't. Except for the neighborhoods, like you say, that are that are coveted, that don't have a lot of listings, and when those people still want to, because lots of people still have job security and they have money and they like this in Toronto especially, right? So
Well, it's true. I mean, there are sectors that are just hit harder, and everybody, who are in other are secure. So, um, listen, I would say affordability is still affordability. Like you just can't find detached homes in a good school district, a 4 bedroom forever home, that under $2 million, and if you're lucky that you're getting it by 2 million, right? So going back to interest rates, variable, where are they sitting right now? Still, they're lower finally.
yeah, their variables an interesting proposition because you mentioned the Bank of Canada earlier. So as a quick aside, they had their first meeting of the 2026 yesterday. And no one thought anything was going to change, but what I was interested in, what was the messaging behind what's coming up? And
That's
they're
what you always have to listen to, right?
yeah, and they were very, very vague, which I think is kind of a protectionism thing. They didn't really say much. They said, inflation is kind of where we need it to be. Unemployment is X. We're worried about these things, but nowhere in that messaging did they say, oh, we might go down, we might go up. And I think part of that is because of what you mentioned at the beginning of this was, back in COVID, it was like, don't worry, everything's going to stay low, borrow, borrow, borrow. So now they're kind of doing the opposite. They don't want to promote borrowing and stuff, but maybe they're just saying, like, just expect things to stay where they are and get out there and do things that you need to do.
Get on with your life, yeah.
Yeah, variable is, you're going to get anywhere from prime minus a half to like prime minus one if it's an insured mortgage. I mean, if you have less than 20% down. There's a lot of variables that affect that. But for the most part, you can get below 4 on a variable, and then fixed rates are around the 4% range, give or take. I mean, there's a little bit of sway depending on the products and things.
Well, traditionally, variable rates have been below fixed rates. I mean, I always assume, correct me if I'm wrong, by the way, but
Yeah,
I
they
mean,
are. Yeah, no, you're right.
but I would also find it interesting that, like you said, the majority of Canadians like to know what their mortgage payment is going to be and that they don't want that to fluctuate and they want that stability. So they go with fixed. And I'm sure you can't answer this because I guess it would just depend on who the person is. But going into 2026, like when you are advising clients, what are you seeing as like the best bet?
No, that's a great question. It is very unique to the client. I mean, I tell most people to think about a couple of things. One of them is, are you going to lose sleep every time there's a Bank of Canada rate announcement coming? Because when I started this, nobody knew what the Bank of Canada was 25 years ago, and nobody cared what they had to say.
Right? That's all I'm saying is no, when I bought that house when I was 23 years old, who's the Bank of Canada?
That's right. So now it's the opposite, is everyone's always talking about it, but no one really gets what they're doing anyways. But the bottom line is, if you're going to lose sleep about it and you're always going to worry about what's going to happen, maybe variable isn't the right choice for you. The other thing is can you weather an increase? Like every time the rate goes up 0.25%, I'm just making up a number. If your payment goes up $70 a month every time the rate goes up, can you weather that? And are you comfortable with the fact that that may happen? I mean, it may not happen for 2 years. It may not happen for 6 months. I have no idea, and neither does anybody else. But those are the two things people have to ask themselves, because historically, variable does generally win out on an interest perspective, historically. And it may be no different right now, because for the most part, variable rates as of today are going to be a little bit lower than the fixed rates you're going to get on average. And fixed rates, I don't know that they're going to go down much more than they are. I mean, 4% is still historically very low for
Pretty
fixed
good.
rates. Yeah, I mean,
It's pretty good.
we have to back out this sort of 2% fixed rate, because this year, 2026 is going to be the most mortgage renewals we've had in mortgage history, if you want to call it that, because so many
I just
people,
renewed mine. Yeah.
yeah, so many people refinanced and so many people bought and did all that in 2021. And then even when rates were, the other part that people don't consider is that when rates were really high 3 years ago, many people were taking 3-year fixed rates, not 5-year fixed rates in 2023. So all those mortgages are also coming up for renewal. So we've got people coming out of very low rate fixed mortgages, and we've got people coming out of higher rate 3-year fixed mortgages this year. So 2026 is going to be a busy year, and many people are going to be faced with those same questions you just asked me. And I think people just need to make the decision that makes them comfortable and not just filter out a lot of the noise. Look at some of the evidence and the things that affect rates, but if this world in the last 12 months has shown us anything, or even going back 5 years, is nobody knows what's going to happen. We really have no control over what's going to happen. We only have control over what we can do to make us somewhat comfortable. And that's what I tell clients for the most part. I mean, some people are happy with variable and they'll never do other. And some people are like, there's no way I'm touching a variable mortgage. I don't care what my rate is. So
No, I get it. It's a risk adverse personality thing. I mean, speaking about who's getting it right. Morgan, trivia question: how many banks got COVID right when it hit? Right. I mean, when you think about what they all announced and what was going to happen to the housing market, and
oh yeah,
I don't think one of them got it right. So that's what I always remind people is like, well, the bank, TD just said, okay. Or they put in these predictions about what's going to happen in the next 5 years. I'm like, that's not worth what the paper is printed on. They have no idea. I actually think it's completely irresponsible for them to predict what's going to happen in 5 years because they have no ability to do it. Speaking about fixed 5 years. So going back to that, I think there were so many headlines and like Chicken Little, the sky is falling, like interest rates. We have the biggest number of mortgages. I don't know a single person, because if they say they didn't get that call, I would be shocked. How many people got that call from their banks They were in whatever mortgage and they called them and said, hey, how would you like to redo your mortgage? And they were going to get, I'm a variable, like a girl. I'm always in a variable. And I got a call from my my bank and said, how would you like to get into a 5-year fix? And I said, no, thank you. She's like, no, you want to because it's lower. And I said, I do not want. And I ate the higher rates later on and I'm okay with that. But a lot of those renewals were just people going, I'll take a deal for a little while. I could afford it at the higher price. And yes, it's going up. And by the way, my variable renewal was a little bit higher for sure. So having said that, you get into a 5-year fix, let's say, okay? No one knows what's going to go on 5-year fix. You're a first time buyer. Morgan, and I may be putting you on the spot, but how much principal do I pay down if I'm making my minimum payments on a 5-year fixed in 5 years?
That's a good question. From a percentage perspective, I couldn't answer that.
Guesstimate.
When we get like an amortization schedule, I'm just thinking of someone I was signed up yesterday, and it was probably like maybe every payment for this 5-year term, they took a 30-year amortization, is probably around 70% interest to 30% principal and interest, like give or take.
Payment. So if their payment was $3,000 a month, let's say 70-30.
Give or take, yeah.
Yeah. So I'm not, sorry, I didn't mean to put you on the spot, but I wanted to illustrate something in the idea of this, safety around these 5-year fixed rates. And again, going back to whether you can afford a house or not. And the reality is that there needs to be a cushion, because even if you fix yourself into a 5-year, where you're going to be in 5 years, you haven't paid down enough of your mortgage that you can be like, I'm good. It's okay. It can go up because I've paid enough down that I've less that I'm mortgaging now. And so all of these things need to be thought about before, fixating on what that best, because again, as we talked about, and I think we'll do the self-employed person in another episode, but sometimes the best rate is not the lowest rate.
Yeah, it depends. Like you said, we could do a whole other hour talking about that. For someone with a salary job, they're never going to pay an extra dollar on their mortgage. They just want to make payments. They don't care. Then yeah, you know what? The lowest rate's going to save you the most amount of interest. That's a given. That's no mathematical argument for that. But when we start looking at the differences, what if you have plans over the term of that mortgage? Like, I see this a lot with people that they'll get a mortgage from a lender that maybe doesn't have very flexible conditions on porting the mortgage. So what that means is if you start out in a condo and you want to sell it and buy a house because you've gotten married since you bought the condo and have had a kid, maybe that lender only lets you buy and sell on the same day. And maybe they have a policy that doesn't even allow you to increase the mortgage with them. They exist. Not every bank does that, but they do exist. And I see it all the time. So, there is lenders out there that will give you the absolute lowest rate you'll ever see, but they have certain caveats in there that as long as you don't change your mind on anything for 5 years, you're good and you're going to save the most amount of money. But no one can tell me what's going to happen to them personally over 5 years any more than what they can tell me is going to happen, in the country, in the world, that kind of thing.
Or even 7 years, because you have to renew it. And then what happens in that, I get tons of calls from clients who are like, oh, my mortgage is coming up next year, so we're going to buy. And I'm like, but you might be able to buy now. And
we look at the planning of people too, because I do get clients that want to buy rental properties as an example. Maybe they don't want to have a portfolio of 20 properties, but people don't realize that there's different rules around qualifying to have more than one property, and some banks do it well and some banks don't do it well. That's just how it is. So, I can get you a great deal from this bank. Sure, this one's 10 basis points cheaper, but over the coming years, from what you've told me you want to do, this mortgage fits what you're trying to do because of these reasons. And one example of that, because sometimes people will say, what do you mean, is that there's, one lender partner who will give you a really good deal. Maybe it's not the best rate in the market, but it might be 5 or 10 basis points off. But if you come back to me and you want to buy a rental property, a lot of lenders will charge a bit of a premium on a rental property mortgage. People don't realize that. It doesn't always happen, but this lender, as an example, will, in a lot of cases, waive any rental premiums if you already have a mortgage with them. So that could be as substantial as 25 basis points difference, which is all of a sudden getting into significant savings, significant enough. Just once you start talking about a few $1,000s of your own money, why not plan ahead and try to sort that out, right? So there's lots of reasons why we would consider one over another. But like I said, for vanilla, I'm never going to pay another dollar. Then yeah, let's just get you the best rate as long as it's not limiting. But there's lots of reasons to look at things a little bit outside of that microscope for sure.
And I think I want to like close the loop on this as we've covered everything. Is it just goes to show you? And by the way, I don't have like I full visibility. Like I started as a kid with TD. I've been with TD my whole life. And so that's a different story. If I were to do it over again and it was my kids, I would tell them to speak to a mortgage broker, especially if you're getting into an investment property. I think that people don't realize, and I might be beating a dead horse because I say it all the time, is that banks are still a business. I think they see them as the government. I think people think like they're so heavily regulated, like whatever they say is the best thing. I always say if the bank is recommending, whatever the bank is recommending, take the other thing because that's what they're going to make the most money on. Don't take my advice.
No,
I'm
no,
just
I know
saying,
what you mean.
happy, like funny, but not funny, but they're still selling products. So your HELOC is a product, your mortgage is a product, your credit card is a product. They are salespeople. And going to a mortgage broker allows you to say, hey, you know what? I thought I wanted a Honda, but maybe I need a Toyota. Or maybe I can afford a Mercedes, but I won't know if I'm walking into the Honda dealership, right? So, dealing with a mortgage broker and understanding all of these. And we just had a client that was referred to our team who wanted to buy their first investment property. And I said, have you asked them if they've spoken to a mortgage broker? And they're like, well, no, but they have this much down payment, which was really hefty. And I said, that's great. Sounds like they can afford it. But there's so many nuances. Like, you want to go buy an investment property? You're not getting the posted rate. There's a different posted rate for investment properties. There's different nuances that you need to understand. And if you don't go and speak to a mortgage broker and understand, you don't want to know what the options are. So I will say, I also want to have you back on to talk about the basement apartment units. That really blew me away. Every time Morgan speaks at the sales meeting, it's like I'm writing stuff down and learning something new. So thank you so much for being on Leverage. I hope you will come back and chat some more with us. And thanks. And I think that's it, guys. Like if you're thinking about doing anything this year, do your due diligence, but don't wait for the perfect storm. I don't think it's coming this year.
Nope, I agree.
That's it. Thank you.
All right, thanks.